Welcome to The Deep Dive, your express lane to understanding the most important global business insights. Today, we're cutting through the noise and jargon of Q2 2025 earnings calls. We've looked at dozens of global companies. Our mission really is to pull out those crucial nuggets of knowledge, maybe some surprising facts, across all sorts of industries: tech, finance, healthcare, consumer goods, you name it. The idea is you can get instantly well-informed about what's truly shaping our world. We're going to dive into the explosive growth of AI and cloud, dissect some shifts in consumer spending, look at health breakthroughs, and examine energy and finance. Our goal, help you connect the dots and see what these trends mean for you. So let's just jump right in. If you had to pick one overarching theme from all these calls, what's the absolute biggest story right now?
Oh, without a doubt, it's the relentless march of AI and cloud infrastructure. It's everywhere. We're seeing just unprecedented investment and integration, not just abstract ideas, but real drivers of revenue, efficiency.
And the numbers back it up, right? It's not just talk. You look at Alibaba, their cloud intelligence group revenue surged 26% year over year. That's what, RMB 33.4 billion, mostly fueled by AI demand.
Exactly. And they're positioning themselves quite deliberately as this key enabler for other businesses, especially for that post-training of proprietary AI models.
Right, like for education or healthcare firms using Alibaba's open source models as a base, it naturally drives their cloud platform usage.
Precisely. And they expect that cloud revenue to keep growing. But, Alibaba's not alone here. Oracle is making some incredibly aggressive moves.
Oh yeah, what are they saying?
They're projecting total cloud revenue growth over 40% in fiscal 26. That's up from 24% this year. And cloud infrastructure growth, over 70%.
70%, wow.
Yeah. Their aim is #1 cloud database, #1 cloud applications, and the #1 builder of cloud infrastructure data centers. They actually said they'll build more than all competitors combined.
That is a bold claim. How are they planning to pull that off?
Well, a big piece is Oracle 23 AI. It's their AI data platform. They say it's unique because it makes customer data instantly available to popular LLMs, and this is key while maintaining privacy. Plus, they're embracing multi-cloud. Their database is now in Azure, Google Cloud, AWS, gives customers real flexibility.
Okay, that makes sense. Avoids lock-in.
Right. And what's also really interesting is their integrated AI agent-based application suites. Think ERP, supply chain, HR, healthcare, banking, the whole gamut. They claim no one else is trying that breadth with AI agents.
So Oracle's building these integrated suites, while maybe Amazon's AWS sees things a bit differently. They mention usage is still in an earlier stage for AI compared to established apps.
Yeah, it suggests that, while lots of people are experimenting on AWS AI services, the truly massive, expansive use cases, maybe they're still taking shape. It's a different read on the maturity curve.
And then you have Alphabet, Google's parent, investing heavily in what they call agentic capabilities.
Right, AI agents, they can chain events together for complex tasks. They're pretty upfront about the hurdles, though. Reliability, that compounding latency issue, cost control.
Sounds tricky.
It is. But they say they're making robust progress, believe they're at the frontier. It really highlights the massive engineering challenge behind the vision.
And the sheer cost involved underscores this AI race. Look at NVIDIA.
Oh, absolutely.
Yeah.
NVIDIA now calls itself an AI infrastructure company. They're projecting get this, $3 to $4 trillion market over the next 5 years just for this kind of infrastructure.
Trillion? That's astronomical.
It is. And an AI supercomputer, like their upcoming Rubin system, isn't just one chip. It's like 6 different types of chips, hundreds of thousands of GPU compute nodes. Massive scale.
So it's not just about the GPUs anymore.
Not at all. And NVIDIA stressed performance per watt. It's critical.
Yeah.
Because data centers have power limits, right? So higher efficiency directly means more revenue you can generate from that fixed capacity.
That makes the hardware innovation absolutely crucial. And speaking of hardware constraints, TSMC.
Yeah, the chip giant. They confirmed capacity for their advanced 3nm and 5nm nodes is very tight and likely to stay that way for a couple of years. Demand from AI products is just huge, especially as things transition from 4nm to 3nm.
So they're building more capacity.
Actively. They're planning CoWoS capacity expansion. That's the advanced packaging needed for AI accelerators for both 2025 and 2026. The bottleneck is real, but they're working hard to widen it.
It's clear the foundations are being laid at an incredible speed. Cisco, for instance, saw AI infrastructure orders from their big web-scale customers more than double their original target this fiscal year.
Yeah, their CEO called AI a major tailwind, driving a whole architectural shift. They see opportunity everywhere: web scale, enterprise adoption, sovereign AI, these neo clouds. and that emerging agentic phase we talked about.
And it connects directly to how businesses actually run. SAP is embedding AI everywhere with Joule, their generative AI assistant.
Right, they expect AI to automate tasks like customer onboarding, patching systems, solving support tickets, freeing up people, boosting productivity.
Salesforce seems to be proving that out already with Agentforce.
That's their digital labor platform. It's already got over 8,000 deals in just 2 quarters since launch. Pretty impressive uptake.
And the impact. They said it's handling 750,000 customer support cases, cutting case volume by 7% year over year.
Which allowed them to redeploy 500 support staff into higher impact data and AI roles and save $50 million annually.
That's a direct, measurable, bottom line impact and a workforce strategy shift, really.
Absolutely. It shows AI isn't just about efficiency, it's reshaping jobs. And it's moving beyond the enterprise, too. Look at Samsung with Galaxy AI.
Right. They're pushing for more personalized, intuitive experience, moving from app-centric to agent-centric, and from touch to multimodal interfaces.
They're collaborating with Google, integrating things like cross-app interfaces and Gemini Live for real-time screen sharing. It's about making AI more seamless in daily life.
And then there's Meta, looking even further ahead.
Yeah, they reported seeing their AI systems start improving themselves. Slowly for now, they said, but undeniably.
And their CEO's vision.
He believes developing superintelligence, AI surpassing human intelligence in every way, is now in sight. Their goal is personal superintelligence for everyone. Big vision stuff.
Well, that's maybe further out. IBM is seeing results now. Their data revenue grew 7%, mostly from AI offerings. Automation up 14%, helped by the HashiCorp acquisition.
It just shows the sheer breadth, doesn't it? From foundational chips to superintelligence visions, AI is touching every part of the tech world. Okay, so while tech is building that AI future, let's shift gears. Let's talk about the consumer. How are people actually behaving right now?
Yeah, it's definitely interesting. We're seeing some maybe contradictory signals in spending habits, what people see as value, how digital is changing things. It's a bit nuanced. Look at Home Depot. Sales were up, US comp sales up a bit too.
Okay, so some growth.
Yeah, but what's interesting is how they saw customers doing more smaller home improvement projects. But at the same time, the average ticket price went up.
Huh, how's that work?
Driven by a 2.6% jump in sales of items over $1,000. So it suggests people are maybe cautious doing quick wins, but also willing to spend on bigger ticket quality items, investing in value, perhaps.
Interesting. A sort of split personality in spending. McDonald's saw global comparable sales up nearly 4%.
Decent.
And loyalty is huge for them in the US. A quarter of their business comes from loyalty members. And those members visit way more often, like 2.5 times more.
Loyalty pays off.
Definitely. Their McValue programs, like the $5 meal deal, are working. But they did flag an issue. Core menu pricing for non-loyalty folks. Combo meals over $10 can hurt that value perception. It's a constant balancing act.
Coca-Cola seems to be managing that balance. In Latin America, volume dipped slightly, but price mix was up 15%.
15%. Through pricing actions and favorable mix, they're expecting 5–6% organic revenue growth for the full year, so they seem confident in their strategy.
Meanwhile, Walmart is just crushing it on value and convenience. U.S. e-commerce sales up 26%. Delivery from stores up almost 50%.
And fast delivery too, right?
Yeah, about a third of those deliveries were in 3 hours or less. Incredible speed. They said AI isn't really driving top-line sales yet, but they're focused on value over 7,000 rollbacks, way up from last quarter.
Clearly doubling down on price leadership. But it's not all about discounts, is it? Luxury seems okay.
Not at all. Hermes reported growth everywhere. Japan up 16%, America's up 12%. They credit loyal local clients in their value strategy, which for them means, craftsmanship, exclusivity.
A different kind of value. And L'Oreal is adapting too. Skincare faced some headwinds, especially in North Asia.
So what are they doing?
Acquisitions Medic, Dr. G, and rolling out the affordable Mixa brand in Europe. But here's the AI link again. L'Oreal is using AI heavily in R&D, predictive formulation, scanning molecules, building an AI moat for future innovation.
Fascinating. Even in cosmetics. And P&G, still commanding pricing power.
Seems so. They operate in daily use categories where performance drives choice, right? They said price has been a positive growth driver for 19 of the last 20 years.
Wow, consistency.
And ongoing innovation Tide Evo, new Oral-B toothbrushes, supports that. Even with tariffs hitting some SKUs, the overall price increase averages out around 2.5%, kind of in line with inflation.
Okay, and one last consumer shift, Philip Morris International.
Yeah, this is a big one. Their smoke-free products are just exploding. In Japan, 10 million users. IQOS is nearly half the total nicotine volume there now.
And in the U.S.
ZYN saw huge growth, over 36% in June-July, growing with the market. And crucially, the smoke-free business has a gross margin around 70% higher than their traditional cigarette business. That's a major strategic win.
Yep. Okay, from the consumer's wallet, let's pivot. The financial sector. Banks, payments. What's the pulse there? Credit, interest rates, digital transactions.
Well, it's a bit of a mix again. Solid performance in some areas, but ongoing challenges too. JP Morgan Chase, for instance, net income up 13%, revenue up 9%, markets revenue looks strong, up 15%.
But credit losses.
Yeah, they set aside $2.8 billion for provisions, mostly in card services. Net charge-offs were $2.4 billion.
And Jamie Dimon had some strong words for regulators, didn't he?
He really did. Called for simplification, transparency, making things cheaper, safer. Criticized the overlap between rules like SLR, G-SIFI, C-SHARL, Basel III.
He mentioned CRR-ness.
Yeah, suggesting the stress test might actually be holding back small business lending. It really highlights that tension between regulation and market fluidity.
A key point. How about Bank of America? Similar picture on credit.
Provisions for credit losses were up slightly, but net charge-offs held steady year over year. And their net interest income increased, so the high-rate environment is still helping their core lending business.
And Berkshire Hathaway. Always an interesting one.
Their overall revenues were down slightly, net earnings significantly lower, but that was mainly due to swings in investment gains losses. Equity investments showed that volatility, a big loss noted for Kraft Heinz, but a gain for Occidental.
So diversification doing its job, smoothing things somewhat. Any share buybacks?
No, none reported in the first half of 2025. And they highlighted ongoing legal challenges, wildfires involving Pacificor, and that big verdict against their real estate brokerage over commissions shows the diverse risks even they face.
Okay, shifting to payments tech. MasterCard.
They're pushing contactless tap-to-pay everywhere. Shanghai Metro, 60 other transport operators globally. And their view on stablecoins is interesting.
What's their take?
They see them as additive, providing on-off ramps from fiat currency, interoperability, reach, trust, for specific use cases. It's about integrating, not competing.
And using AI.
Oh yeah, big time. Using generative AI and their Decision Intelligence Pro to move from preventing fraud to predicting it. That's a significant step up in security strategy.
Predicting fraud. Powerful stuff. Visa thinking along similar lines with stablecoins.
Very similar. They see stablecoins solving real problems, especially in emerging markets with volatile currencies or limited financial access. Visa's role, providing the trust, standards, connectivity scale, the infrastructure layer for this evolving ecosystem. They also reported strong cross-border volume growth. With Visa Direct becoming a key global remittance tool, they're embedding themselves in these new flows.
And briefly, Bank of China.
They reported solid loan growth, up nearly 7% to RMB 23 trillion, emphasized their role as a state-owned bank supporting national strategies and the real economy. All right, let's move into healthcare and pharma. This sector is always fascinating. Drug developments, devices, market expansion. R&D seems to be paying off.
It's definitely seeing some big results. AbbVie, for example. Net revenues grew 6.5% operationally. They raised their full-year guidance. Skyrizi and Renflex are on track for over $25 billion combined this year.
$25 billion, that's huge. Exceeding expectations.
Yeah, and their neuroscience portfolio also saw strong double-digit growth, driven by Vyalev and migraine treatments. Plus, they're actively doing deals, collaborations, in-licensing, really building out that pipeline.
It's that dual strategy, isn't it?
Yeah.
Maximize the current blockbusters while aggressively fueling the future pipeline. Abbott's doing impressive stuff in medical devices, too.
Like what?
Electrophysiology saw double-digit growth, launched a new catheter. Structural heart up 12%, driven by several key products. Their cardiac rhythm management business is showing very sustainable growth.
And developing new tech.
Absolutely. A next-gen Avir device with 25% longer battery life is in the works, targeting a pivotal trial for a new pacing product in 2026. Plus, they're rolling out products globally in 50 countries and still looking at M&A, a broad growth strategy.
Johnson & Johnson also showing breadth. Strong growth in both innovative medicine and medtech.
And lots of positive data readouts, right? Across a whole range of conditions: myasthenia gravis, multiple myeloma, arthritis, cancer.
Plus, they hit a milestone with their Otivat robotic surgical system. First cases completed, more automation coming to the OR.
Yeah, that's a trend to watch. But maybe the biggest buzz is around obesity care. Lilly reported strong results, net income up 32%.
And focusing R&D there?
Definitely. While overall R&D costs dipped due to a prior impairment, late-stage trial activity increased, primarily focused on obesity. They're advancing amycretin, both subcutaneous and oral forms, into phase 3 next year.
And Novo Nordisk, they're the other big player here.
Dominant, really. The global branded obesity market grew 141% in volume. Novo's obesity care sales surged 58%. Like Lilly, they're also advancing amycretin to phase 3.
The demand must be incredible.
So much so, they're committing massive capital DKK $65 billion in 2025 just to expand manufacturing capacity, building out the whole supply chain. Ingredients, production, packaging. It's a huge bet on sustained growth.
Wow. Roche also showing growth in pharma.
Yep. Pharma division sales up 10%, driven by strong performers like Phesgo, Xolair, Hemlibra. Diagnostics was stable, absorbing some pricing pressure in China. They're also investing heavily in R&D, breast cancer, obesity, hypertension treatments, plus computational biology and human model systems for early research, looking for those selective, high-impact bets.
And lastly, in health, United Health Group. Any major news?
More about focus and leadership, refocusing on performance discipline, bias for action. Some key leadership changes announced at Optum, aiming to re-energize product development.
Okay, let's shift to our final sectors. Energy, industrials, automotive, core industries navigating some unique dynamics, supply chains, and new tech like autonomy.
Right. In energy, the picture was a bit down year over year for Chevron. Net income $2.5 billion, down from $4.4 billion. Revenues also lower, partly hit by a valuation adjustment on Hess shares.
ExxonMobil.
Earnings also down slightly from Q1, but they specifically highlighted the Permian production potential. Suggests continued focus and investment in that key U.S. oil region.
Okay, moving to industrials. GE Aerospace.
Lots of focus on engines. Working with Boeing on certifying a durability kit for the LAP-1B engine, rolling out blade improvements. Their big GE9X engine, the most tested ever, went through dust testing pre-launch to inform design tweaks.
Sounds like long-term iterative improvement. How's business?
Narrow-body engine revenue is beating expectations, thanks to LE growth and the long life of the older CFM56 fleet. Wide-body services expected to grow steadily too. They do anticipate a profit headwind next year from initial GE9X shipments, which usually have higher upfront losses.
Makes sense. Now, automotive and specifically Tesla, big focus on autonomy, right?
Huge focus. They hit a record 20% sequential jump in test drives in North America, launched a new long-range RWD Model Y variant to attract more buyers,
And FSD, full self-driving.
preparing for a broader supervised release in China pending regulatory approval. They also launched the Model Y in India, big move into the world's third-largest car market.
And the robotaxi.
They reported rolling it out in Austin, Texas, and even autonomously delivered a car from the factory straight to a customer's home. That's quite something.
What's the grand ambition there?
Their stated goal is to address half the population of the U.S. with autonomous ride-hailing by the end of this year. Subject to approvals, of course. They expect service areas and vehicle numbers to grow at a hyper-exponential rate.
Hyper-exponential, that's ambitious.
Very. They see FSD as the single biggest demand driver. They're pushing for approvals in Europe and China, too. It really highlights the race between the tech and the regulators.
Definitely a space to watch closely.
Okay, let's round things out with telecom. Keeping us connected, exploring new stuff like satellite services.
Right. T-Mobile US reported fabulously well. ARPA growth, average revenue per account, underpinning service revenue growth of at least 6%.
And satellite is playing a role.
Apparently so. They said T-Satellite surprised even them with its contribution to ARPA growth. It's helping them serve rural markets where their win share is much higher than their overall household share suggests.
This is finding new customers.
Exactly. It fits their dual strategy. Maximize returns from existing fallow capacity unused network and smartly invest in new opportunities, like the planned merger with US Cellular to boost competitiveness in smaller rural markets. Wow. We have covered a ton of ground today, from that AI arms race in tech to how consumers are spending, health breakthroughs, finance, energy, connectivity. It's a huge landscape.
It really is. And what stands out, I think, is how interconnected it all is. AI isn't just a tech thing, right? It's enabling predictive fraud detection for MasterCard, accelerating drug discovery for Lilly and Roche, optimizing retail supply chains for Walmart, powering Tesla's autonomous driving ambitions.
And consumer behavior feeds right back into that. People demand more personalized, efficient digital experiences, which in turn drives the need for all that tech infrastructure we started with.
Exactly. It's this intricate web.
So as we wrap up, here's something to think about. We talked about all these big trends and results from these global giants, but what seemingly minor innovation or trend we touched on today? What small seed could quietly grow into something massive, something industry altering in the next 5 years. Maybe it's the efficiency from Salesforce's Agent Force. Maybe it's the sheer scale of the obesity drug market. Maybe it's that relentless push for more chip capacity. These earnings calls don't just tell us what happened, they hint at what's becoming possible. Things that could fundamentally change aspects of your daily life you might take for granted right now. What will you be watching for?